We have Amar Singh, who's a vice president who tracks for Angel One derivatives and, of course, the technicals. Amar, very warm welcome. What do we say? We were just expecting a rebound, the kind of trade that we see in global markets, though the Asian markets are also mirroring the kind of losses. It's in deep red. Asia market is also trading up with it today. Intense FI selling is not stopping. Lackluster earnings, we already knew that many of the sectors which are facing the margin compression or even the inflationary pressure, even the outlook going ahead, management are not very confident about. This, of course, altogether paints a very, very weak sentiment and very weak picture also. What are the crucial levels that you're eyeing on, the key support levels for Nifty and Bank Nifty at this point?
Yeah, actually, if you look at Nifty to start with, we did witness that it had bounced back from the recent close of 23,840, and from there almost towards 24,500. So there was roughly around a 600-700 point rally. But overall, we've been very clear with our view that higher levels will be sold into, and that's what some of the technical indicators they continue to point from an intermediate term trend perspective. So having said that, we witnessed selling pressure, and also, as you rightly said, domestic triggers have been negative in the sense that quarterly earnings, be it or maybe the selling by the FIIs and also the downgrade. So they have compounded, and also what we are seeing is that the advanced decline ratio is more in favor of the bears. So it's more of spread out across the large caps or the mid caps. Earlier we saw Reliance witnessing some very sharp sell-off happening. It's the IT which has really saved the day to a certain extent, and IT still has been positive, like HCL Tech has been positive, but otherwise most of the stocks have taken a beating. So the levels to speak about, I would say, for the benchmark index, Nifty somewhere around 23,600 levels, because earlier, 24,000 was acting as a very important psychological and technical level. And below that, 23,800 is something which is very crucial. So if we see a break below 23,800, consistent break, it could be if it breaches during the day and then comes back and closes. So that should be taken as a positive. But if it breaches below 23,800 and sustains below 23,800 for a few days, that means there will be more selling pressure. And then the next zone of crucial and major support for Nifty would be around the 23,400 to 23,600 zone. That would be the next major support zone. What's likely to happen is that there could be some pullback. So people might assume that we are witnessing a trend change. That's not likely to happen in the short term till the time we see Nifty sustaining over the 24,500, 24,600 zone. So it's more of a sell on rallies. Yes, there is very crucial support at 23,800. So if we don't see that breach, we could witness a pullback, but it's going to be more of a range play with the bears having the upper hand as of now.
That means 23,800 is a crucial support level where you would want to watch and take your next strategy ahead. In that case, Amar, and yes, of course, all rallies are being sold into. What we saw, there was a chance, though the VIX hasn't moved much yet. In fact, there was a breather which came in yesterday. But now talks are also about that Nifty could even touch its 200 DMA. How much do you think it is possible?
I would say it's, if you look at India VIX, India VIX has not increased much. So that is the positive sign. So that despite the correction, investors and market participants at large, they are not very much perturbed until and unless there is a very sharp correction, and which is somewhat of a significant magnitude. Today also has been a sharp correction. It's almost down by 250 to 60 points for the Nifty. But if it continues for a couple of days, then we could witness a spike in India VIX. Otherwise, it could remain in this range. As far as hitting the 200 DMA, very likely. Because what's happened in the major benchmark indices is that the intermediate term structure of the charts that has changed a lot, meaning that that clearly shows that there is a lot of weakness, and expecting that there's going to be a sharp pullback and rally. That's not likely to happen. There could be some consolidation. Again, higher levels, as I said, would be sold into, and we could witness some consolidation. Breaching 23,800 is something then we could witness some sharp correction of 300 to 400 points on the downside.
Amar, since you've mentioned select pockets of growth coming in, you do have IT that is making it to your list there. But do you think realty is also making it to that list? Because you did have the realty index that snapped a 3-session losing streak. What is your take coming in when it comes to that entire realty pack? Do you see some strength coming in there?
So if we look at the realty pack, so what is happening here is that realty, most of the stocks have already corrected significantly. So if I look at DLF, DLF has corrected, it's trying to form a base. If I look at Godrej Properties, again, some sharp correction from almost 3,500 levels to currently around 2,600 odd levels. Exception is Lodha is an exception, I would say. There we are seeing some sort of, I would say, positive momentum. Otherwise, Mahindra and Life Spaces also we are seeing some correction, but it's very close to support zones. Overall, reality is an exception. It really hasn't corrected much. It continues to remain strong and firm. So this is one which is helping. Prestige, again, we are seeing some consolidation post the correction from almost the 2,000 levels to currently around 1,600 odd. It's very crucial. It's a very crucial support zone. But what's happened in most of the realty stocks, leave apart overall reality, is that the trend for the intermediate term has changed. So that's not very strong anymore. That's on the weaker side. That's the reason we'll see some sort of consolidation there. And some of the realty stocks, post the sharp correction which has happened over the past few weeks, they are at crucial support zone. So there could be a slight pullback. So it could be more of a dead cat bounce rather than a real sharp recovery in this space.
Very quickly, which pockets are you going to eye? Any specific recommendation for our viewers at this point in time?
I would say infrastructure, cement is one area one can keep a close watch on. I would, in terms of stocks, Ramco Cement is one stock which one can definitely keep a close watch on. Despite the market correcting, the stock has been holding up quite firm, and today has been a sharp up move for the stock. So this is one stock one can look at from a buying perspective. So any pullback towards 900, 905 is a buying opportunity with a target of 953 and a stop loss of 879. And the other is from the food and beverages space. That's the Jubilant Food. That's the other stock one can keep a close watch on. We've seen some pullback because the stock had corrected significantly, almost from 900 levels to sub 500, currently it's around 635, 636. So this is one stock one can keep a close watch on, buying around the 630 levels with a stop loss of 607 and a target of 675 on the upside.
Jubilant Foodworks as well as Ramco Cement, so the ones that make it to Amar's buy list. Thank you so much, Amar, for joining us today and taking time out.
If you like this video, then like, share and subscribe to ET Now.